All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. It has been a while since we've done Palantir Weekly. Arnie cannot make it today. I don't even know if Amir is going to make it today. He said he would, but he lives across the world, and he honestly might not be able to, just given the time difference, which kind of speaks to the first thing I want to talk about, which is, and I've said this publicly already, and we talked about it all publicly, but Palantir Weekly is likely not going to be weekly going forward for two reasons. Number one, it really is hard to get the schedules to line up and get everything to go weekly. That's just like product of life, and people have kids and all this different stuff. Number two is, and I'd be curious to get Matt's thoughts on this as well, is there's not as much to analyze on the company as much as there was 4 years ago. We crossed $200 a share today, so we'll talk about that. But I think that in and of itself is indicative of the fact that the company's a bit more on autopilot, and there are things to analyze, but not to the level that it was when it was $6, which means you might not need a weekly episode anymore. So, Matt, any thoughts in general about the company maturing and content creators maturing with the company as well?
No, I think you hit it on the head. I mean, to be honest, big shout out to Arnie and Amir, because even though they would have to wake up at like the break of dawn, they didn't complain nearly as much as I would have complained. So they're real troopers in my eyes, and they kept it kind of going. And it's been a blast in retrospect to really cover the company, literally from discrediting and misinformation, which I think is the main reason why we were doing Palantir Weekly, is like people just really didn't understand at all what the heck was going on with the company, to now really having a lot more, I guess, knowledge, and now people can sit there and be like, okay, this person is literally just a hater, or is probably a paid political shill. Like, they don't know anything that's going on. It's very easy to spot those people now, whereas before there was so little information that I think people truly could grasp and hang their hat on, that anybody could steer the ship in whatever way that they wanted. And so it was really relying on us to really, not us alone, of course, and in tandem with the company putting out great information, and Eliano and Chad and all those guys putting out great information to really help people along the way to understand the true potential. And I think now people get it. And so I'm with you. Like, as the company has gotten into its new stage, I feel like we don't have to give as much to the community, as much as people love for us to talk about it every week. There's so many great people that are covering it, and we saw that when we were going into New York. You and me, we met up with a group of people, and so many great people that have been covering it. Amir, Arnie, you don't necessarily need a weekly episode. Just follow those guys, and you'll get whatever information that you need. So.
Yeah, I agree. And well, our brother from Sweden made it. Amir, what's up?
Hey, Palantir 6 monthly. Here we are. What up, everyone? Man, you guys rushed this episode. I thought we used to do this like 5 past. So my bad. I'm here. Happy to see everyone. Happened to hear most of what Matt said, and I can only agree.
Yeah, Amir, we were just talking about how we're going to probably not even monthly, but we will likely be back every earnings for an episode with all of us, not weekly anymore. So just your thoughts on the evolution of the need to do a weekly episode.
Yeah, probably every viewer as well felt it for quite a while that Palantir really, the thesis has largely remained the same. The pace of how quickly Palantir actually reached where we thought that they ultimately would be able to reach. I mean, they probably blew past everyone's expectations, including mine. But, when the thesis starts to play out, it kind of feels sort of autopilot in a way. Of course, you have to keep track of the company, make sure that they're on the right track. But, doing a weekly episode for Palantir, especially when they themselves didn't really feel the same need to prove themselves, historically, they would have all these frequent press releases. There was a lot to try to uncover, try to understand what each Palantir product does. Like there was a lot to dig into. But as of late, I'm sure a lot of people felt the same way, that, well, we're kind of talking about the same things. Maybe the stock reached a new all-time high. It felt like like bi-weekly. So we would talk about the stock price. We would, give some comments about the valuation, but there wasn't really much meat to the bone, so to speak. So I think it makes a lot of sense. I mean, even the first idea was to okay, well, weekly might be a bit too much. How about monthly? But even on a monthly basis, I mean, it's still kind of the same thing. So I think this makes a lot of sense. That would make it like quarterly. Maybe if something big happens, we can do an episode to discuss that. Just do it. Play it by ear. Like when there's something to talk about, when there is value to provide, when there's stuff to discuss as a community, then it makes sense. To get together and talk about it. But just making the weekly episodes, there's simply not the same need for it. I mean, we all Amit covers, I'm sure, Palantir like daily anyway on his show. I'm sure Matt gives out comments frequently. I do that as well, just like Matt was talking about before I joined in. So to me, it makes a lot of sense to do it this way.
Yeah,
even though I'll miss talking to you guys so often, but
you're not going to you're not going to miss waking up early, so it's like, it makes sense. It was a big burden on you and Arnie, but the fact that you showed up basically for the past year and a half, both of you, it's a testament to how much this journey has mattered. All right, folks, let's get into it. Big day as we head into earnings. Palantir, $200 a share. I don't even know how to describe it. I mean, kind of felt like it just happened. Even 100 just felt like it happened. Then 100 got normalized. I mean, I guess we'll start with you, Matt. Like, what was your reaction when you saw this, and how are you thinking of a stock now that is $200 a share and reaching $500 billion in market cap?
I mean, it's insane. I mean, when I first purchased it, it's kind of a milestone for me, because my bull case when I was first kind of purchasing Palantir back in September 2020 was like a $500 billion market cap at that point. Right now, obviously that target has moved, but initially it was like a $500 billion market cap. It was like, 150, 250, maybe 500, right? It's going to take forever, and it'll eventually get there, by mid 2035 or something like that. It's going to have to prove itself, and it's just obviously took about a third of the amount of time that I was really expecting it to. And partly I think is because people see the true potential of it, and institutions really see what it can do for enterprise software. But I think also it is, and it continues to demonstrate itself to be a huge part of the economy and the backbone. And I think it's only going to get even more so as numbers get released and deals get released in 26 and 27. I mean, just the amount of political leaders that the company just continues to work with, it's just insane. So to me, it makes complete sense that we're here, and not that scary now that I know some of the things that have been going on and some of the deals. It's insane.
Amir, same question to you. And, you have been someone who's really helped us understand valuation. You are someone who really understands Excel sheets, DCFs, etc. I think all of us got humbled over the past year and a half, because at some point, all of us agreed, hey, this thing is getting expensive, and it continues to get expensive. The growth continues to go up, but if the stock continues to grow up and the growth continues to go up, the multiple still expands versus comes down, because at the end of the day, the rate of growth of the market cap is so exponential compared to the rate of growth of the company that, now it continues to trade above 100 times sales. How are you thinking of the market cap, the valuation, and have you kind of given up on this whole idea of saying, hey, maybe it's too expensive because they've proved the growth story to such an extent that you just believe they're going to keep growing into it?
It is quite a humbling experience in a big way, and I don't think that many, like everyone listening today, I don't think you will experience something like this very often, or perhaps even ever again in your investing lifetime. It felt like it was yesterday that Palantir was like $50 billion market cap. Now we are past $500 billion, like well on our way to that $1 trillion. Now, when I say humbling experience, is because the way intrinsic valuation works is that you need to revalue the business every time you're given a reason to. Palantir, like each quarter that has been passing, like the intrinsic valuation on my end has just like been exponentially increasing. I mean, prior to last quarter's earnings, my fair value was something like 75, and we were trading like at 130, 140, pushing 150. Q2 earnings come out, and Corp is like, yeah, we're gonna 10x like US revenues like in 5 years, and you're like, damn, okay, what does that mean for intrinsic value? And my intrinsic value almost doubled to 135 just in a quarter. And even prior to that quarter, 75, as of Q1, it also like increased a lot like from the quarter prior. So each quarter that passes, Palantir just keeps proving everyone wrong. Like that, my expectation, I'm sure a lot of people on Wall Street expectations are just simply too low. The company is executing at a way faster pace than anyone really expected. So it's quite humbling when each quarter that passes you like almost double the valuation each quarter, because you learn so much new, you get new and higher expectations. And those expectations, like if we just rewind like 2 quarters, people would have said that like, yeah, we're expecting a lot from this business because as you mentioned, it's been expensive like all throughout for quite a while. We all felt like probably expensive. The P is up there, the price to sales is up there, fair value is probably way below where the stock quote is. But the market humbled all of us. The market has actually probably been giving Palantir letting it trade around what is actual fair value. It's just that we're all trailing it. We just don't see it yet. So I think this quarter might be similar, where I raised my expectations from the company, but I wouldn't be surprised if I'm still way too bearish, and I would have to revise my fair value again. So as I mentioned, as of right now, it is around 135, and that is like by a lot of growth, given Carp's own quotes. But yeah, I mean, this company is quite magical in that sense. Like you never know. Like even like seeing, I'm sure we're gonna get into it. But if you go back like a year ago, people would have told you, yeah, Databricks is gonna eat Palantir's lunch and like all of these things, and then you're like, no, it's not actually a completely different playing field. Actually, these people all want to partner up with Palantir, and that is what has happened now. The Databricks partnership, Snowflake partnership, another one that was gonna eat Palantir's lunch if we go back to the early days. Like these aren't even like the same kind of companies. So yeah.
Yeah, I think it's a fair point. I have like 5 simple reasons why I think the valuation has continued to expand the way it has. Number 1, OpenAI is worth $1 trillion, not profitable, foundation model company, potentially commodity. Palantir is seen as the actual use cases for AI in the real world. So the street's like, hey, if OpenAI gets $1 trillion, then Palantir probably has to get something that's maybe not $1 trillion, but definitely.
Where's the trillion from? Is that like the expected IPO now? Because the raise.
Oh yeah, that's what I meant to say. Yeah, that's what I meant to say. OpenAI is $500 billion, but whenever they go public, it will have to be at around that $1 trillion range. So I guess the street's kind of comping like that. But OpenAI was $350 billion when Palantir was $100 billion. So now Palantir is catching up to it. But yeah, I guess the expected value of OpenAI obviously is the trillions, and you would argue Palantir is more valuable. Number 2 is the option market. So I was talking about this a couple months ago, but the amount of liquidity in options, Palantir is a top 10 traded stock in the entire stock market globally every single day. We're talking about minimum of 1 million calls and puts traded. So when you have that many people just trading the name in and of itself, there's going to be a floor to the stock, because there's going to be a lot of people ready to buy the dip and then ready to sell or put puts and calls on it simultaneously. So from that perspective, I think algorithmically the name has gotten such a big presence in the community for investors, retail and institutional, that has led to the sustained momentum. Number 3, piggybacks off that. If there is a dip, now people want to buy, right? So if it falls from 200 to 180, like one could argue 180 is still really aggressive, but people will buy. Just like when it fell from 180 to 142, when Citron said they were short And I don't know, they haven't said anything in the past couple months now, but when that dip happened, people bought aggressively. So I think now the name also has kind of that Tesla, Nvidia type of attitude towards it, where if you get a dip, you have people that are just salivating for the opportunity to get exposure, and that creates a floor to the price. Fourth reason, they're growing faster than everybody, right? So this is the only SaaS company on the planet that has guided 50% growth for Q3 and 45% growth for 2026. No other SaaS company, I think the fastest you have is like 32% by some of the cybersecurity names, but none of them are growing this fast. I mean, there's a world in which we could grow faster in Q3 than NVIDIA grows faster. And, it's a different scale. But the point is, in the age of AI, if growth is what matters and Palantir can sustain it, especially with their free cash flow margins, it will likely continue getting the premium. And then finally, Karp's meeting with people in Poland, Karp's meeting with people in Ukraine. I mean, just internationally, the level of his brand and the rock star that he has become, the amount of inbound that Palantir is getting from world leaders, governments, institutions, U.S. commercial clients, now international commercial clients, that also adds the premium to the stock. People want to bet on a leader. Karp has an autobiography coming out in a week. I actually interviewed the author of the autobiography, and that video will come out on my channel tomorrow. But like the fact that there are literal books being written about this guy, it's going to add a premium. And I think, again, the stock price at the end of the day of any company is how much someone is willing to pay for it. And if there's all these other reasons besides just the growth, which the growth is incredible, that adds to why people are willing to pay for it, that's why you've got the stock trading where it is today.
Yeah, I mentioned it, quite often on these episodes, but I think like Palantir is the ultimate momentum stock because it's been, almost like a year and a half now where there's like no negative catalyst attached to the name. Like every single thing is just like super, super positive for the company. Like every news that comes out, like each earnings is better than the last. All the news surrounding the company, like just like positive catalyst after positive catalyst. Like there hasn't been anything like tying this company down, which is why I believe like it was able to reach like all these new highs continuously. Like so I think that also plays a big part of how we were able to reach 200 so quickly. I don't think anyone really expected Palantir to be at 200 by this point, but yeah, all positive news all the time for like a year and a half, then yeah, you reach these kind of pricing multiples, after a while.
Yeah, agreed. All right, so let's get into earnings. The company is guided for about 1.03 or 0.8 billion of revenue. I'll get the exact number. The street's expecting 1.09, so that would be about 50% growth. Exactly 50% growth. And so I guess we'll start with there. Amir, I'll give it to you. What do you think Palantir is going to put up? What numbers are you the most concerned about? And now that the stock has made a run of about $20 before the earnings, how are you thinking of the price going into the earnings?
Well, I think maybe like it kind of feels like you're kind of like softballing it. Like me, I feel like I'm softballing it, but I have them doing 112, so that's like 54.5 ish, and like the split is 620 government, 500 commercial. But that is by expecting that net dollar retention is going to reach 130%, which means that 30% of these 54 are like from existing customers. So like the whole scalability is still like playing a major part and gives you a lot of like kind of free growth in that sense. So I have them doing 112, 54.5 kind of feels low balling it, but that's still where I'm at. And we know historically Palantir kind of when they give out their guidance, they're like kind of guaranteed to beat it, and quite often by quite a margin. So 115 maybe too low, but that's where I'm at. But that's still like really impressive, 54.5, and that is, as I mentioned, off the back of net dollar retention of 130%, which also, if they just retain their current operating margins, which I actually expect them to improve, that would mean a rule of 40 score surpassing 100, like for the first time. We're all been like memeing about, even Karp himself, like, yeah, we should rename the rule of 40 to rule of 80, then rule of 90. I think they're gonna actually surpass 100 this quarter. So that's where I'm at with those, major numbers. But the one number that I'm really looking forward to is actually the customer count growth. I think this might be the first triple-digit increase in existing customers. So if they can do more than 100 added customers for this quarter, then that's like the main number that I'm very, very hyped about, because we already know how they're able to scale their current customers, with especially now with, AI FDEs coming out, all of these new AI agents that they've been unveiling. So, scalability is probably there with existing customers. So it remains like the number one metric to track, like how many new customers can they add. And if they can do 100 and then 100 rule of 40, then pretty high. But yeah, my actual revenue numbers, 54.5-ish, which is 1.12.
Matt, same question to you. What are you expecting? And before you go, I just want to say, I think one of the reasons Palantir keeps beating on earnings is that they guided revenue of 1.087, which is basically 1.09. The street has them at 1.09. And this is not the same for a lot of companies. Companies will give out a guide, and then the street will be overly enthusiastic about what they can put up, because the street knows that companies tend to go lower than what they can put up. And they raise the estimate, which means the company has to beat the estimate. I think almost for the past 7 quarters, the street has not really raised the estimate against what the company guided, because every time they kept thinking there's no way they're going to be able to actually accelerate at the level that they say they will. And they don't want to get too optimistic. And then Palantir beats by a wide margin, and the stock goes crazy because perception is reality, and the expectation or the perception of the growth ends up not being reality when Palantir over delivers. So Matt, do you think that is something we could get again going into Q3?
I think so. I mean, I'm thinking that they continually know where they're at, and they want to knowingly beat analyst expectations. And so I think that they always try to be reasonable. And I think, to their own surprise, I think they see a lot of efficiency gains in quarter. And I know there's not a lot you can do. The quarters are baked in years ahead of time, if you think about it. Like the things that you're doing, you have to set in motion quarters upon quarters ahead of time. And there are some small tweaks that you can do to make some numbers come forward a little bit. But so I feel like they always have a very good grasp as to what the numbers look like. And as we've kind of seen, it's not a very cyclical business. It's a very, subscription-based business. So you can kind of see where things are the trajectory of things very far in advance if things come in as expected. I personally am thinking that we're going to have a 52% revenue growth quarter. So to give people some notes, I think we were at believe it or not, 725 million in the year ago quarter. I'm thinking we're going to get to 1.1 billion, which is crazy to even think about, but possible. The things I think I agree with Arnie. He posted something specifically like he also, I think, was thinking north of 50%, definitely a 5 handle. But I'm with him. I'm curious to see how the margins show up, because the cash flow ops margin and the income margin and everything showed up so strong last quarter. And I'm used to seeing it kind of waver a little bit. So I'm curious to see if they stay where they're at, because the thing that blew my mind last quarter was we entered a new territory for cash flow margin. We entered a new territory for ops margin, I think being like 54 and 46 respectively, or swap them. My thought process is like, if that's able to be maintained, then my trajectory for the company and its market cap needs to be readjusted, because I was always thinking we'd top out at like a 40-45%. But if we're already this much in its infancy of where the company is, and they haven't even really tried to optimize for that stuff yet, then you could see something potentially growing into the mid 50s and high 60s in terms of free cash flow margin. And in that case, you're talking about, hey, when you get to $10 billion a year run rates, you're talking about potentially $5 to $6 billion of free cash. We already know it's a very capital light business. So I don't know, just very interesting thoughts about where margins might go going into next year.
Yeah, first of all, I don't know why Wall Street never actually adjusted to Palantir continuously outperform. Like they never learn. Like even if you go back and you watch, we have two analysts that are frequently invited. Hopefully there will be more. This quarter, I say that for each quarter. Hopefully we have more analysts on the call. But we have Mariana and Dan Ives. They have proven themselves to actually understand the business, like of Palantir. But if you look at their projections, they're also like kind of they're not like extremely above consensus at all. Like they're quite in line with consensus. So even those kind of experts on Palantir, they still like kind of lowball the numbers. Like even though Palantir keeps outperforming like massively, when you read their equity research reports, and their estimates, they're still kind of timid about the numbers as a whole. And yeah, I think the major thing that has been lost, in the valuation of Palantir, people used to try to do DCFs for Palantir, and the range of free cash flow margins, as Matt was talking about, like people would see something like, yeah, they're probably gonna stay around like 30, maybe 35 in a bullish scenario of free cash flow to the firm margins. But as we've been learning, I mean, they've far long surpassed that. I mean, last quarter they did basically 50% free cash flow to the firm margins and 56.7% free cash flow margins. I think as Matt is like talking about, like if you can reach, I think this business can actually have something like 60 to 65% long-term consistent free cash flow to the firm margins. And when you then try to do a DCF with those margins, like it changes the model completely. That's how you reach these 100 plus kind of fair values, and in my case it's at 135, but that's how you reach all these like super high valuations for Palantir. Is that you actually expect them to reach like some crazy levels of there's like no major SaaS business that has 60 plus free cash flow to the firm margins. So that's why like it kind of never entered the conversation. But when you introduce that, that's when the stock price kind of starts to make sense. I still think like 200 plus is a bit early, but I'm ready to be humbled by this quarter again. Like I've been humbled, previous quarters. But yeah, like it starts to make more sense when you actually adjust the free cash flow to the firm margins, to those extremes. That's kind of like unheard of in the market. And Palantir is the kind of business that does unheard of things,
Yeah, I mean, I think you're right, and I agree. I also think 200 is a lot from where we are today. I mean, I do think net income will show up north of 500. So if you think about it, if they're able to annualize that, that's $2 billion a year. That's pretty good, right? I can't complain with $2 billion a year, especially with having a product that's just kind of come out, really over the past 8-9 years. It's and they've really only been hitting it hard for I'd say the last 3. So to me, yeah, I know it's a 20-some-year-old company, but they've really been focusing particularly on the commercial side, rather recently. And I think that the reason why it is at 200 is a lot of what you said. Like it's this new margin exploration phase that we're kind of in. And all you've been seeing, even if you saw net dollar retention going down, right, and the growth slowing down, you still saw these margins going up and to the right. And now that you're in a profitable stage, it's like, where does the buck stop? And I think until you see it roll over or flatten, I think we're going to continue to be in this discovery phase for the price, because people don't know what to expect, right? They're able to grow 50% year over year. And if they're able to get the margins up to the 60s, like you said, then Jesus, like it completely blows out what everyone's market cap expectations were for the company. And so it won't take much if you think about it in terms of revenue. And we already know how beneficial this company has been for every company that's worked for, the majority of the companies it's worked for. And generally speaking, the only reason why, from the stories that I've seen in the paper, is generally speaking, people don't renew the contract because it works too well. And they're afraid of like finding out too much about the company or getting rid of whole parts of the organization or being too reliant upon one company. I've seen that. I think some people get afraid of how powerful the software is because it really requires you to trust and partner with Palantir to be able to get the true gains. But I think until we start to see something roll over, like I think that's why the price has gone to 200. And I don't think that until you see net dollar retention, until you see revenue year over year, all that grow, I think that's my key to stop.
Sorry. That was I was pulling off your screen. I pressed the button.
Kick him out. I was like, what?
No, he was on fire. No, but Matt, the point you're broadly making about how they're doing $2 billion in net income potentially quarter or potentially year on a company that's realistically had their product in the market commercially for 8 years and gone pedal to the metal in the past 3 years, I think that's a big deal. Now, the problem is people will say, well, okay, it's a $500 billion company doing $2 billion in net income. That's a bit egregious. And like, yeah, you can say that's fair. Then it comes down to what Amir has been saying, which is this whole margin profile thing. I mean, like, Amir, can you speak a little bit more to this question of growth and margins? Because do you think there's a world where they can get free cash flow margins above 65%? Or do you think the sustainability of that 65% is realistic? Because if it is it kind of the street just saying we've never seen a company like this in the history of software? And therefore, yeah, we're giving it a 600 PE, but we're not that afraid to give it that type of multiple.
Look, the thing with multiples is that, they don't really work for this kind of hyper growth company, and they've never done it, historically either. So trying to rationalize, like, let me see. Currently, Palantir is trading at 665 times PE, 150 times price to sales. Now, those are, looking at our trailing 12 months. Even if you look a year out with, analyst expectations that have been proving, too pessimistic historically, it will still not make sense because the company is growing at 50%. Like, these multiples, they grow just too quickly, where like it doesn't really matter if the PE is 600, 500, 400. Like, these are all expensive. Like, if Palantir was cut in half at 300 PE, that will still be expensive. So you can't rationalize this kind of company by the multiples. You can rationalize it by doing an evaluation where you look, okay, what is this company gonna be doing for the next 10 years? Oh, I mean, what's our best guess as of right now? And then you can start to make sense of it, because you're looking at, okay, what are they gonna do far out into the future, and you bring it back today. So valuation wise, you can try to see, okay, what is Palantir worth? But when you try to price it with the PE and price to sales, it will never make sense for this kind of company. Historically, you wouldn't be able to buy any of these super large to today's top 10, top 5 companies when they were in this phase, because they all had expensive multiples. Maybe not to this degree, but at the same time, like, which company was expected to grow continuously at 50% at this size while improving margins? So you can make all these arguments for, is the premium in the pricing justified or not? But even like, if you cut the stock price in half, it still doesn't make sense. Like, you would have to drop it by 80% to kind of make sense of it. And I think even the biggest bears would agree that, yeah, Palantir is probably worth more than if it was gonna drop 80% to a place where the PE makes sense. Pricing will not make sense for a while in Palantir. So hyper focusing on it doesn't really make sense to me. Now, if you tell me that you value the company and you looked at, okay, here are my expectations for the business, for the growth, cash flow, and risk associated with that growth and cash flows, and then you tell me, yeah, I think it's worth this, and then you try to, reason around it, then we can have an actual conversation. But if your argument is just like, yeah, the P is too high, well, like, it won't make sense for this kind of company, not for a long while yet. So those kind of investors, they will always exist, where they, try to make sense of the pricing. And yeah, the stock is not for you, and that's not like living in bubble territory. It's just like the mechanics of the business is in this stage. It will not make sense, like, ever for any company that's at this size, growing at this pace. Like, the pricing will never make sense for you, and it's fine. Like, if you're not the kind of investor that's comfortable by looking at the high PE and not really beyond that, then the stock is simply not for you. Keep in mind, like, pricing is just near term or like trailing 12 months. Like it won't capture the whole growth narrative of Palantir. For that, you need to value it, and that's completely different. That's the way I view it anyway.
I think that's a really good point. I think the most important thing you said right there is like if you were to cut the Palantir PE in half and it goes from 600 to 300, that's a pretty expensive stock trading at 300 times earnings. So it almost becomes like the numbers are irrelevant. And it's like, it's not to say that to undermine the sophistication of looking at those multiples, but it's rather to say on a hyper growth company, and Tesla, Amazon, these are very clear examples of it. The multiple always seems aggressive, but if the company actually is able to put up the growth, things change, narrative changes, and then obviously the companies can grow into those valuations. And over the life cycle of Palantir's business, at some point it's going to become very mature. It's not going to be able to grow like it's growing today, but that doesn't mean that it's a bad company to buy in those early days of growing based on not being able to see what the future is going to entail. It also discounts all the innovation, all the R&D, all the new products Palantir might be able to come out with over the next decade that, you know, a lot of us don't even know about yet.
Yeah, like I was just gonna say that like pricing makes sense for a business that is mature. I mean, Palantir, we can't even guess the next quarter correctly. They like blow it out of the world. Like what are you what are you talking about here? Like it, yeah, it will not make. It does make sense, and it is a great shortcut for, you know, business that are mature where you actually have a comparative, because, you know, at the end of the day, pricing, you know, PE and price to sales, it makes sense when you have a comparison. Like, who can you compare Palantir to today? Like, is 200 PE in general expensive or not? Well, it depends. What are the different companies trading at within the same industry? Like, what are the peers to that company trading at? Then
Right.
you can assess, okay, 20 is high or 20 is low. Like maybe they should come up to 35 or whatever. Like you need to have a comparison. There's no comparison to Palantir, and they are so far from maturity that it simply makes no sense to look at, you know, pricing. That doesn't mean that you should stick your head into the sand and just ignore where Palantir is trading and be like, yeah, buy at all costs. That's not what I'm saying at all. I'm saying if you want to have a valuation approach, then you actually need to do an intrinsic valuation if you want to make sense of it, because it will not make sense until Palantir is mature on a you know, pricing side of things. That's the way I view it.
I agree. That makes a lot of sense. Matt, your last point was about revenue growth and how that's likely going to scale up, which is why the multiple continues to be where it is. Part of that revenue growth eventually is going to have to be customer count. How are you thinking about this metric? Amir said that this is going to be one of the more important ones. Is this something where you want, I mean, they have 850 customers. Is there a number in your mind that you want to see for this quarter on customer count?
Yeah, I think I was around 925. Let me see. So I think, Amir, you said 100 quarter over quarter, which I think
I was really hoping.
Yeah, I mean, I would agree. I think that would be awesome. They got 80 last quarter, so they went from 769 to 849. There it is. Yeah. I don't know. I think 10% quarter over quarter is pretty aggressive. But even still, even with the 925, that's 47% growth year over year. Because that's going from a 629, I think is the third quarter last year. So from 629 to 925, which is where I'm forecasting it at, it's still 47% year over year, 9% about quarter over quarter, 76 growth in customers. I mean, I'm like hopeful that they'll beat the 80 from last time, because I just seen so many different contracts. But at the same time, I feel like what we're seeing is more expansion of existing contracts. There have been new contracts, don't get me wrong, but I think, and this is actually going to be a question that I had for Amir, is one thing that I don't track in my spreadsheet is, I think that you probably do, is that top 10 or maybe it's top 20 customer, and how that's growing. But going back to your statement about revenue growth, I mean, you're coming off of a base of, I think it was over 128% net dollar retention last quarter. And if you're able to maintain that, then you really don't have to move the dial much in terms of getting new customers to have total revenue expand massively. But overall, I still think you're going to have a very good growth overall from from about 45 to 50% year-over-year customer growth.
So let's talk about the customer count for a bit, because that is one metric that I've felt has been trailing the actual growth a bit. So the like net increase in customers hasn't really matched my expectation. Like when you just look at revenues and you just ignore how many customers are there, and then you were like to apply, okay, how are the customer count likely growing based on the growth that Palantir is seeing? I would have expected it to be a lot more. That hasn't really exploded in the same way that revenues and everything else has. So I agree that it is a big jump. They did 80. I expect that to increase to 100. But my reasoning is that Palantir is continuously increasing their presence, on a global and public scale, and also their attractiveness. Each quarter that passes, the results of Palantir integrations keep taking a lot more attention in media, on earning calls. There are more and more customers saying that, oh my God, it's like the best thing that happened to our business. Like for each quarter that passes, like the whole presence of Palantir keeps growing. And that's why I think like they are increasingly more attractive on the market. And that's why I expect, customer count to actually start to boom a bit. Now I know that, quarter to quarter, as you mentioned, like this quarter's result, as you mentioned, that's like the cumulative results of, way back when. Like it's not like, yeah, they did this in one quarter and then all of a sudden they're gonna sign all of these deals out of nowhere. No, it's like a continuous process to build up to a quarterly result. But I still think that it has been trailing a bit, so I kind of expect that to accelerate a lot more. So that's why I like kind of feel like 100. I don't know where Amit is on this, where you feel like where customer count growth should be at, but I think like 100 is not too unreasonable given how big Palantir has gotten, and how much attention Palantir has been getting. So I'm curious where you're at on this one, Amit.
I agree. I think it's time for them to be adding triple-digit customers every single quarter. I don't know if it's going to happen, and I think they can get away with a couple more quarters of not doing that simply because their margins are good and the average deal size is so large that it wouldn't really affect revenue. But I agree with you, given the level of momentum we are seeing, particularly in US commercial, it would be, I mean, they're already guiding for 45% year growth, right? They upped the guide. So how do you get that growth? You have to be confident that the customer acquisition cycle is working. And so from that perspective, it's like you would imagine the deals start closing more immediately and the customer count scales. Also, again, I think we are all underestimating the level of brand awareness the company has gotten. And just from like my visits to AIPCon, these customers are coming to the conference because they want to be associated with Palantir. Like we didn't even talk about the NVIDIA partnership yet. We'll get into that. But like the fact that NVIDIA and Jensen Huang, the most important guy in the world, says that this is the most important software company in the world for the enterprise. Like what does that do for the sales and marketing of all these customers that want to develop a relationship? So if we don't see it this quarter, that's fine. But I would imagine by Q4 and onward, we should be adding triple-digit customers. I think you're 100% correct on that. Having said that, let's transition to the NVIDIA partnership. Let me play the clip right here. It was pretty iconic seeing this at the GTC conference from NVIDIA in DC. Jensen and Karp also took the stage to do CNBC together, which was quite incredible. But this was Jensen on Tuesday discussing the partnership with Palantir.
This is the single fastest enterprise company in the world. Probably the single most important enterprise stack in the world today, Palantir Ontology. Anybody from Palantir here? I was just talking to Alex earlier. This is Palantir Ontology. They take information, they take data, they take human judgment, and they turn it into business insight. We work with Palantir to accelerate everything Palantir does so that we could do data processing at a much, much larger scale and more speed, whether it's structured data of the past, and of course we'll have structured data, human recorded data, unstructured data, and process that data for our government, for national security, and for enterprises around the world, process that data at speed of light and to find insight from it. This is what it's going to look like in the future. Palantir is going to integrate NVIDIA so that we could process at the speed of light and at extraordinary scale. Okay, NVIDIA and Palantir.
They go on to do a demo that was uploaded as well about Lowe's and how they were integrating NVIDIA models into Palantir AIP. Matt, let's start with you. What was your reaction to just seeing that partnership and impact you think it has on the company long term?
Yeah, I mean, I think it's vital, right? I mean, compute is obviously a huge piece of being able to get things up and running, and it matches entirely with a great partnership with both of them, right? I mean, without being able to structure things in an appropriate manner and have them automated in an appropriate manner, which is obviously putting it in an order and in a manner that makes sense, then why compute it at all, right? I mean, it doesn't make sense in terms of being able to do it. So now, if you're able to have things running much faster and having calculations set up that are automated, you're going to be able to get things that run much smoother, time series data that shows up in a much faster manner, the ability to come up with models that showed that your digital twin needs to be optimized here or there or elsewhere. It'll shrink the amount of time it takes for each individual, say, calculation to take place, and or it'll increase the amount of model runs that you can use to see if more optimization needs to be done. Sometimes what ends up happening is people will say, well, I'll only run 100 iterations of this calculation, which might have thousands of different nodes in it because of the time it takes. Well, if you're able to integrate collectively with an NVIDIA chip or system, then you might do 1,000. You might be able to find one or two additional steps that you could take that might lead to thousands of dollars of additional opportunity that otherwise you might have just skipped over for time purposes, right?
Amir, your thoughts on the partnership?
Yeah, I'm not an engineer to actually understand fundamentally what a partnership with NVIDIA in this capacity actually means. Like, what's the difference, prior to the partnership and after? So from my perspective, the biggest takeaway here is that NVIDIA reiterates, what Carp and the team has been, banging on the table for, continuously. And that is, that ontology is like the most important part. And that is what you will need in order to, bring AI properly into the enterprise, being able to assign properties to any kind of data, and contextualize everything in a way that you can't do without an ontology. So my biggest takeaway from this, partnership is Jensen Huang reiterating that ontology is the most important part, and you do need it, Then in terms of like what the actual partnership does, how it accelerates everything, like I don't understand that part yet. Like I would have to have it broken down to me to actually make sense of it. So I don't know about that part, but I still think like NVIDIA is now the biggest company in the world, $5 trillion market cap. They've been at the forefront of this whole AI revolution. Everyone pays attention to them, and them coming out and saying, as you mentioned, like, yeah, it's probably the most important, enterprise software company in the world. Like that speaks volumes, and reiterating like everything that Carp and the team has been saying about ontology in general. So that's like my biggest takeaway from all of this. And as you mentioned, I also think that it will be kind of wake-up call to a lot of businesses out there.
Yeah, I agree. Just having Jensen reinforce that Palantir is the most important software company in the world from an enterprise stack perspective, I think that's what's really, really important. And obviously, NVIDIA has an incentive to do this because they want to make sure that all these GPUs and all this compute that they're selling, all the hyperscaler CapEx, like it has to have a use case. And Palantir has been saying all the value is going to be in chips and ontology. Chips is the hardware that makes the value get created. Ontology is what allows the value to be actualized in the real world. And so to have someone who's creating the chips partner with the other company that's saying, hey, we're the beneficiaries of the chip, we're the impact of the chips in the first place, not just like the models, but the integration of the models at the end of the day, that is a really powerful partnership. And I think that could lead to more increased customer count with the increased brand awareness.
Yeah, I was gonna mention, how the quarter prior, like all of the hyperscalers started coming out and mentioning Palantir. For example, Microsoft was mentioning Palantir in their own earning calls, and as you mentioned, like it has to make sense to the hyperscalers and ultimately to Nvidia, like because you are building, like you are investing so much capex into all of this compute, but if you can't justify the cost, like if that compute isn't being utilized, then you can't justify spending all of that capex. So it is in the hyperscalers interest that their clients find a way to utilize all of that compute, and which is why I think like all these partnerships with Palantir, with Google, Microsoft, Amazon, like they have kind of to push Palantir because like they have all of this dormant compute that they keep like investing so much capex. They need to ensure that their customers actually start to utilize it in order to justify all of that spending. So I think similarly, Jensen Huang like kind of pushes Palantir because it has to make sense out there in the AI world. Like, okay, we have all of this compute, but when do we actually start to see value from it? Because if there's no value on it from it, then people are gonna stop buying chips. Like it makes no sense if you can't start extracting value. So it makes sense that the hyperscalers were pushing Palantir, probably still are. It makes sense that Jensen Huang now even himself starts pushing Palantir, because once people start seeing like, oh my God, we're actually extracting huge amounts of value from AI. Now it makes sense that we're spending so much capex. Now it makes sense, in that regard. So that's the way I view it.
Yeah, I agree. There's got to be an impact to that capex, and it looks like Palantir is creating that impact with their use cases. Last question for you guys. Again, thank you everybody for joining. We will be live at 3:30 p.m. Eastern on Monday as we get into earnings, and we'll be covering it throughout the course of Monday afternoon once we get those earnings. Rob, thank you for the super chat. I just hit 4 million after going all in on Palantir back in 2023. Keep up the good work, fellas. Congratulations. I think a lot of people have similar stories, and it really has been the journey of a lifetime. Rob, you have some other super chats here with some questions. I think the last discussion we're going to have will sum up a lot of your questions. And that comes down to, what should Palantir do with their cash? So they have $6 billion in cash. They're probably going to have 6.2 to 6.3 billion in the next quarter. No debt. A lot of rumors of a stock split. A lot of rumors of acquisition. Should they be investing the money in different venture companies? I mean, I'm curious what you guys are thinking. I'll just give my thoughts real quick. I do not think there's going to be a stock split. I think that's a weird rumor that got started. I mean, you're going to need the stock to be a bit higher than 200 for them to justify splitting it. Also, there's already 2.5 billion shares outstanding. I don't think Palantir wants to have 10 billion shares outstanding. So I really don't think that's going to happen. In terms of their cash, I don't think they should do anything with their cash. I don't think they should buy back stock. And I don't think they should invest it in crypto. I don't think they should buy gold. I think they should keep it on the balance sheet, get a nice 3.5% return from money market funds, and just let that cash sit there. Because other than investing it in sales and marketing, maybe hiring people to increase growth, I mean, like that stuff is great. I don't think they should be taking that much risk with that cash. I think having that cash and having a fortress balance sheet is really important. Matt, how are you thinking of the $6 billion in cash?
I mean, I don't necessarily think that they should be spending it like crazy either, but I do think that there's a place to utilize some of it for venture capital, and I think that there's a lot of people that leave, unfortunately, Palantir because they have the entrepreneurial spirit, and some of that money could go to help starting up some of their companies, or at least feeding or fueling some of them, if they leave on amicable terms, of course. And Palantir doesn't necessarily want to embed whatever they're working on into the broader product line of what's going on at Palantir. I also think that one of the key things, which I wrestle with myself, so I'm going to say it, and I'm sure people will poke holes on it, and it's something I've been saying for quite some time. There's a lot of partnerships that go on with the cloud businesses like AWS, Azure, Google Cloud, and that's good. I think that should be fine because that allows Palantir to get up and running very quickly. But I think one of the things that could be done at a premium that Palantir could control more so, especially if there's very proprietary data that they want to make sure is very isolated and maybe kept away from, say, other companies. They could create their own disparate cloud product that is allowing them to potentially control a little bit more of the process. Granted, I know it requires a lot of infrastructure and capital, but I think in the long run, we've seen how good of a multiple that's generated for value for some of these other companies like AWS Amazon, Microsoft, and Google. Maybe it's something that's useful, but I think I would rather go the venture capital route before doing something like that, because I think venture capital investing in stuff like Wejo and some of these other things that unfortunately may or may not pan out, I think in the long run helps propel us into the next decade or two of new industries that can arise. So that's where I would hope. Of course, I would like to see some buyback because of the share-based compensation. As a shareholder, I'm always trying to acquire more of the company. So I'm still buying to this day. I took a long pause for a long while, but since we met up in New York, it made sense to just continue to buy more and more of the company. I think it's a phenomenal company I want to hold for the long term. So I am somewhat selfish that not necessarily use it all for buybacks, right? Don't exceed cash flow from operations, but I do think that there should be 5 to 10%, maybe closer to 10% of that cash flow from operations to be used for buybacks to at least offset. And I know stay at 10%, that's fine, but eventually you'll hopefully be able to fully offset share-based compensation, which I think a lot of people have been complaining about for the last several years, is that expansion of share count because of share-based compensation.
Amir, thoughts on the cash pile?
Yeah, it's a great problem to have as a company, no debt and ever increasing cash pile. That is an interesting thought that Matt made about having, own cloud infrastructure that you can offer, in highly sensitive stuff. But the problem, the only problem I see is that will compress, margins. It will, go from a capital light business to, quite capital intense business where you have to, because the problem is that we're seeing is that each new generation of chip increasingly more expensive, and you need to keep upgrading. That's why you see these capex cycles, like for every quarter that passes, these hyperscalers are increasingly, we're gonna need spending hundreds more than we expected, over the coming periods. So I don't really want Palantir to enter that. I think they have kind of infinite scalability with their current capital light model, where they can have extreme margins. So I don't know necessarily the whole implications of what doing that would mean for Palantir and its cash. I don't think they have enough cash to do that properly. They would have to take on debt, most likely, $6 billion. I don't know how much building out the whole data center with the infrastructure and stuff would mean. But it is an interesting thought, and maybe there is such a scenario in the future where it does make sense. Currently, we always mention well, Palantir has some of the best investors on its board, the co-founders, Peter Thiel, one of the most famous investors in the world, most successful investors in the world. Alex Karp himself ran a hedge fund. So we always thought that it was kind of strange that they didn't really go the venture route, earlier. Even other co-founders like Joe Lonsdale also involved in investments for a long time. I would have liked to see, probably they're going to go public soon, but it always made sense to me, if they would have a stake in Anduril, and it would have made sense for Anduril to have a stake in Palantir, considering how tightly knit they are, on the hardware plus software side of things. There is, tiny overlap. Anduril does some software, and I guess Palantir, in a very limited capacity, does some, hardware as well, but not anything major. So it would have made sense to have a stake in Anduril. I would have liked that, mutually, to propel, the West into the next generation of warfare kind of thing. But to be honest, I don't really know, and it's not really a problem that they have to address quite yet, while interest rates are where they are. Just keep farming that cash. But that is a conversation that will become more and more important, as rates come down, as the yield that they're able to get, from buying treasury instruments and stuff like that will come down over time, most likely. So it is something to consider. I don't really have an answer like what makes most sense. As I mentioned, it is kind of a nice problem to have. They shouldn't really burn cash for the sake of burning cash either. So as long as you can farm yield, do that afterwards, then yeah, we can have a conversation. But Carp has said on multiple occasions now that they're not cash constrained in terms of their growth. Like piling in more cash, like burning more cash won't necessarily mean meaningful increase in growth. So for now, it's not really something that I'm concerning myself with too much. But a stake in Anduril, maybe some other very prominent players in the space, especially considering they have what's the GovRamp? What's the product name? Like, it's too early. FedStart, yeah. Like considering they have FedStart, they have quite a bit of insight into the field, and we've been seeing and hearing a lot, about all of these new companies trying to compete, in the government space, enabled by Palantir. So they have early visibility into, which companies might be winners there. So it would make sense to, to kind of acquire stakes in what they believe, are aligned with their values and their core missions, and stuff like that. So maybe that's something that we will see in the future. But for now, it's not a big problem to concern ourselves with, as long as rates are, as attractive as they are.
All right, there we go, folks. Thank you all for joining once again. Very excited to be here again. We are likely not going to be doing this weekly anymore, and we talked about why in the beginning, but we will be here every single quarter. I'll be on, every single day talking about Palantir. Matt and me are tweeting about it, so it's not like we're stopping the coverage. It's just the weekly edition of this likely is not needed anymore. And, that's a really good thing, to be honest, because it was needed for 4 years and the company executed. I don't think any of us expected 450 billion when it was $6. But I also agree with what Amir said as well early in the show, that I don't think we're ever seeing this again in our lifetimes. I mean, I really don't. It's Matt, I'm curious your thoughts on it, but I don't know if we're ever going to see a name go from 6 to 200 in less than 3 years in the way that it has. And we should really all cherish the journey we're on, because we're going to look back on this 20, 30 years from now being like, man, we all across the world as strangers got to experience, because of YouTube and Twitter and these live streams, witnessing history for a company that will be talked about probably centuries from now in terms of how they became the most important company in the world.
Yeah, it's tough. I don't think you'll see this very regularly. I mean, maybe you have a good lens on it too, Amit, because you had Hood at quite cheap valuations as well. So, but it's rare and few and far between. And I think one of the things is some companies might do something like this. They might move in a manner like this, but a lot of them will be all hype and then something never really comes to fruition. This company is actually executing. They're doing really well. So in that respect, I feel confident that, yeah, maybe people might say, oh my God, they're celebrating $200. Maybe it does retrace. That's fine. I get it. It is overvalued, but in the long term, we're talking about a company that's going to be $1.5 to $2 trillion in my mind easily. And so, sure, take your victory lap if it drops to $150. That's fine. I'm still going to be buying, and eventually it'll be worth $500, $600 a share easily, probably more. And it'll be at some point paying dividends, at some point buying back a crap ton of stock, and I'll be able to borrow against it or write covered calls and continue to live and go about my merry way. But yeah, it's going to be very difficult to find something like we did at such a cheap valuation that was so misunderstood and got to where it is.
Yeah, I kind of blame Amit, because we all used to get the question, oh, okay, Palantir, it 50x, well, whatever, I don't even know, like from where people had their averages, and they're like, okay, so Palantir's is over now. What's the next Palantir? I'm like, dude, Palantir's just getting started. Like, we're not even at 1,000 customers. Salesforce, 200,000 customers. Like, Palantir, like, just getting started. Like, this is nothing. Like, Palantir's story is not over, like, by far. Okay, so people are like, okay, well, what's the next Palantir? Amit, he went and did the same with Robinhood, like 2 companies doing the same thing, like normalizing this kind of thing. So what's next Palantir and Hood? Like, you seem to pick them so often, Amit. So tell us what's next Palantir and Hood. Like, people, he has normalized this thing where people don't actually realize how extremely rare it is to find these kind of high quality businesses that are executing to this degree, growing the way they are. Like, so I fully blame Amit every time I get that question, like, what's the next Palantir? Because, he just seems to keep making more and more of these. So let us know, Amit, when you find the next one, and then we can do a weekly for that company as well.
Well, also Matt, I mean, Rocket Lab 4 to 60, right? Like, it's been a really strong, good 3 years. And thankfully, a lot of us used our insights from Palantir to hopefully find that next one. And, Robinhood's worked out, Rocket Lab has worked out, but it's just not easy. And Rocket Lab and Robinhood are phenomenal, and they both have their own journeys. But they also haven't cultivated the type of community that Palantir cultivated. I mean, the Palantir, those early days when everyone hated it, media, Wall Street, etc., and a handful of us online came together to do the streams or the Substack articles and the podcasts and the tweets, like, Robinhood was never hated like that. Rocket Lab wasn't. They weren't really believed that they could be the companies they are today, which is why they've been so asymmetric. But Palantir was just thrown in the gutter, and you have this fierce community that believed in it. So it's like, I don't know if we're getting that journey again, because you got to ask yourself, this is an argument Tom Lee makes a lot, but one of the ways he justifies the stock market premium is that there's not that many public companies out there. Not many companies go public anymore because they're afraid to deal with the ramifications of going public. So all this money that's trying to escape inflation has gold, Bitcoin, real estate, and then the stock market. And then in the stock market, there's really 50 companies that matter. One could argue there's only 25 companies that matter out of 4,000 public names. And I would say Palantir is on that list. So it really has been an incredible journey. So much of the audience has been along for this journey, which has just made it so much cooler. And as you said, Amir, if this journey is just starting, even though we're at where we're at, this could be a journey that goes on for a very long time. There you go. Thank you, everybody. Appreciate it. Fets, thank you for the super chat. Happy Halloween. Congrats on the conviction. The good and bad times, well deserved. Callie, thank you for the 100 super chat as well. Very, very kind of you. Absolutely means the world. When I meet these 2 guys, I'll make sure to get them a drink from these super chats. And hopefully everyone has a great weekend, and we'll see you guys on Monday for Palantir earnings.
Good seeing you both, and happy 200.
Yeah, likewise. See you guys on Monday.
It'll be fun.
Oh, real quick, Amir, you got a super chat on your channel. Amir, you are one of my favorite quants. Appreciate your high quality research work. Please keep them coming.
Wait, is that for me? I've never gotten $100 super. What the fuck? Wait, is that on my channel?
That's awesome.
It's definitely not mine.
I'm gonna buy Matt and Amit a drink on your dime next. Like, I'm gonna share. Thank you so much for the kind words, K-Roy. I don't even know how to damn, $100. What the fuck? Thank you so much, man.
That's half a Palantir now.
That's half a share, man. Thank you so much.
Real quick, just before we leave. First of all, Matt's Twitter, I'm putting that in the chat, so please make sure if you're on my channel that you are following him there. And then Amir does have a website called Type F Capital. That's where he does proprietary research reports. He also has a Substack. So please make sure to check that out. Amir has done just an exceptional job over the past couple of years, specifically on valuation models to analyze public companies. So if you want a custom valuation model, you can order one on his website. And if you want to overall subscribe to his newsletter, you can check him out there.
Yeah, thank you so much. And also check out Amit's Substack. He posted 2 great analysis already. I think it's just a matter of time until Matt also creates a Substack. So look forward to that.
Matt used to write on Seeking Alpha. We got to get him into the newsletter game.
Maybe I think he still does, right? Do you
I've been slacking. Steve reminds me every day.
The problem is Matt's gotten too rich, bro. Some of parts of the community have gotten too rich. They're thinking of just going on a beach. So it is what it is. It is what it is.
Yeah.
All right. Thank you, everybody. Appreciate it. We'll be back Monday for Palantir earnings. Good night, everybody.
Good night, everybody. Thank you so much again, Kay, Roger.